Hi folks, welcome back to our video on this problem dealing with the allowance for doubtful accounts. Now that we've gone through a little introduction of the problem, let's now have a look at the entries that we would make to correct the errors that we identified in the previous short video. The first area that we identified, we said had to do with the or one of the areas that we identified, I should say, had to do with the fact that the company had, for a write-off from a customer's account, had credited the bad debt expense for $2,740. We said that's an incorrect entry. The debit to the allowance was fine, but the credit to the bad debt expense was not. What they should have done in the event of a bankruptcy is debit the allowance as they did, but credit the AR, not the bad debt expense. So we're going to reverse this credit to the bad debt expense out by debiting it and credit the account that we said we should, which is the AR. Because the accounts aren't closed yet, we can use that to our advantage to make any adjustments that are appropriate to the expense accounts that are there because they're not closed out yet. The other thing we said is that there was a credit balance in a customer's accounts receivable account because they had made an advance payment on a contract. Well, the company incorrectly processed that by debiting cash and crediting the AR. We wouldn't do that. What we would do is we would credit the unearned revenue account directly. So what we need to do is debit the accounts receivable for $48.40 to correct this error and then credit the unearned revenue to fix that. We also indicated that another error the company made was not to make the $4,200 write-off. So we're making it here. We're debiting the allowance and crediting the account receivable to write off the $4,200 that they never did. So now with these three corrections in mind, we're going to calculate the new balance in the allowance for doubtful accounts. Okay, so now you'll notice here that I've highlighted this little guy here in a different color. That's because of all the correcting entries that we made, which are the ones here in the black ink, right? All of these corrections, only one of them deals with the allowance for doubtful accounts. So if we look at the balance that we have in that account now, including the write-off that we would have made once we posted this entry, the allowance would have a balance of $20,430. You remember from our problem, we have an $8,750 balance to begin with in the allowance for doubtful accounts. And during the year, what did the company do? They increased it by $18,620 and they reduced it by $2,740. All we did is once this entry was posted, the write-off entry, assuming we would make that entry, right? We're going to reduce the allowance by $4,200. So what their allowance would look like, given what they did, is $20,430. But now don't forget, any adjustments that we made here to accounts receivable, which is what we did here, with these areas I'm highlighting now, these also need to be taken into account in the receivable balances when we calculate the amount required based on the aging method. The receivables have to be changed, right? In the aging classifications. So now what we've done is we've had to calculate a corrected balance of what should be in the receivables and apply that, our estimates of uncollectability, to find out what needs to be in the allowance. So maybe it would be clearer if we went below and had a look at that. So now let's go down here, all right, and make our changes. So now what we have is we have our aging category under 60 days. There were no adjustments that were made to accounts receivable in this classification. So in our aging schedule, we're going to keep, as part of our allowance balance, $1723.42, which is 1% of the existing net debit balance. However, you'll remember in the 61 to 90 day category, there was a receivable in there that we credited because of an advance payment that the customer made. We said we wouldn't have credited the receivable, we would have credited the unearned revenue. So you remember what we did is we said, well, the company did this, What we're going to do is increase the account receivable back up. That's our correction for 4840. So now what we're going to do is we're going to add the 4840 in, multiply this total amount, which is 141,330 by 3%, to get the amount in the allowance for that aging classification. You'll also remember that the company made an error which we corrected for $2,740. If you go back up here, you'll remember that the company made a journal entry to credit the bad debt expense and debit the allowance for $2,740. We said we would have not made that entry. So to correct this credit to the bad debt expense, we debited it and credited the AR, because this should be what our entry for the write-off looks like. So we need a credit to the AR. So in our correction, we're going to credit it. And that would be a credit or a reduction of the AR by $2,740. So because we know it fits in with the 91 to 120 day classification, we're going to reduce, because of the credit to the AR and the correcting entry, by $2,740. So now the new balance in that classification, which is $37,184, is going to be multiplied by 7% to give us $26,0288. You'll remember that we recently said that in order to do the write-off, there was no entry made for the write-off. So we were going to credit the account receivable in the write-off entry for $4,200. And they told us that that was for a receivable in the over 120 day category. So we're going to reduce the existing balance that they gave us by $4,200 to credit the receivable for the write-off, multiply 19,444 by 20% in order to get $3,888.80. So that's going to be the amount that we need in the allowance for doubtful accounts once we make all of our corrections that include adjustments to the AR balance. So we said that the company would have had, after the write-off of $4,200, $20,430, but they only need $12,455. So we need to make an adjustment to reduce the allowance by $79.75. So because the books are still open, that's going to mean we're going to reduce the allowance or credit it by $79.75, and we can credit the bad debt expense by $79.75. Remember, to set up the allowance, we would debit the bad debt expense and credit the allowance, but now to reverse out what we don't need in the allowance, we can just reverse out that entry because the bad debt expense is still open, meaning that it's not closed. So we need to make that final entry. So in addition to the 3 entries that we made above, this would be our final journal entry to correct the allowance so that it's showing this balance, which is what we need in it. So this concludes our video. I hope you found it helpful.